You have to take it case by case, clearly. And clearly today's environment is one where it's a little bit overheated, particularly when it comes to valuations. And so as an investor, you have to maintain discipline. Now, it doesn't mean that you have to be on the sidelines. But clearly, we're investing today at valuations which are higher than they were just a year ago. But we are passing, I have to say, today we're passing on more investment opportunities because of valuation than pretty much anywhere, anytime in the past few years. So that at some point discipline has to kick in. Look, the fact is that despite these high valuations, the M&A market hasn't really moved in terms of price. Now, yes, we've had a few IPOs recently that have been
high profile.
Yeah, multi-billion dollars, and hopefully deservedly so. But it's only a few. It's less than a handful. And yes, there are other IPOs in the pipeline that are highly promising. Probably the best one being Facebook. But again, you're not talking about a huge number of companies. So the great majority of exits will continue to be through acquisitions. And if you look at the M&A market, the fact is that if you have a successful company, so binary, you're successful, you're not successful, right? So forget all the companies, which is probably the majority, that will never succeed.
Yep.
So if you have a successful company, after a few years of hard work and spending evenings awake at night, you'll sell your business very likely for somewhere between $50 and $100 million. So that's a fact. And it doesn't matter, it's across pretty much all technology sectors. Mm-hmm. So in other words, the companies that sell for $100 million above, we at Huffington Post sold for $315 million. We were by far an exception, an outlier. That's not what's going to happen to most people.
Many more $10 to $30 million deals, or
yes.
20 to 50s.
Right. Yeah. So $80 million, is a good price. 50 is a good price. So you can then work backwards, and if you have a seed round that's in the high single digits, and if you have an A round that's in the high teens or low 20s, it doesn't leave much room for error. And VCs take high risks, and they deserve, when successful, they deserve a high return,
right.
Because that has to make up for all of the failures.
Yep.
Right.
One has to carry 8.
Yeah. So at some point, the math has to come into play, and when we do walk away, somewhat reluctantly perhaps, and then I can also point to moments where we have walked away and the company has sold for $300 million, whatever, and we should have invested. But you can't win them all.
Right. You lose a lot more.